that everyone that listening feel to kind of like ask questions and kind of like challenge.
There's something in common about the world of entrepreneurship and the world of investment. They're all about going head first into uncertainty.
There's nothing wrong with challenging people's opinion. We're in a free world. Let's challenge it, right?
Yeah, let's debate it.
Hey, Sam. Hey, Robert.
Hey, Luca. Hey, Robert. Welcome to the podcast.
Great to join the party.
It is a party in the midst of the summer in Vancouver, which is crazy, huh? Summer in Vancouver. Sam, why don't you start with a quick round table and then we jump into our usual banter.
Okay, awesome.
Last time at the pool, now back to the office.
Now back to the office. I want to invite one of my favorite guests. It's Robert Price. He's a founder of a company called Bode Canada. He's doing something extremely disruptive in the market. I'm going to let him explain to him exactly what he's building, what he's focusing on. But the way I've met Robert, we met at a conference in Calgary. I think it was in Ventures at the time. We met at that time. And only a few months later, I had invested into his company as my first VC deal that I did in Canada. So welcome to the podcast, Robert. I'm excited to have you here and want to learn more about what you're building and what you're focusing on now.
Yeah, awesome. Great to be here. And yeah, we had pretty quick chemistry there at that conference. It was within 15 minutes, we were yelling at each other, agreeing about how insane the real estate industry is on this topic. So always motivated when you meet other founders and other sharp investors with that kind of conversation, when you're laser focused on doing something really big and really important, in our opinion. I'm pumped that you guys are doing a podcast like this, because Canada is still finding its way in terms of capital strategies. Like you really don't learn this stuff in school. You don't learn, even if you go into finance or you get your CFA, you still don't really understand the nuance of how capital and debt and growth kind of connects in the financial markets. It's literally through experience and hanging out with other smart people. So I'm glad you guys are doing this, because entrepreneurship's important, and capital and the strategies around it. It's this opaque kind of confusing topic, I think, for a lot of Canadians, and something we need to improve on as a country.
Is fully true. I mean, in many, many sides, I think Canada is still very mature and not ready to actually welcome entrepreneurship at scale. If you compare it with the capital structure that the United States or other countries that are more eager to support entrepreneurs have, is kind of like, that's why, being an entrepreneur myself, I'm asking many times during the day, why the hell am I here? Given that if I sell my company, I need to pay 53% in taxes, right? Why do I want to give more than half of what I make to a country that has fundamentally no real service to their citizens and entrepreneurs? So glad that you bring this point, because what the reason why Sam and I started to basically invest our time in kind of like, expanding our own area of knowledge, but also helping other founders to see many other opportunities, has been exactly because we believe that there is not enough education in any level, right? And the other thing is that Sam has been desperately trying to convince me that investing in real estate is a good way to invest my money, which I totally disagree. So this podcast was born to demystify my hate for real estate investment. And every time Sam tries actually to convince me, even when we're at the pool, that investing in bricks is a good way to invest, and I told him there's only one type of brick I'm investing into, and I can show you to you. Something that brings me a lot of joy, because I can reconnect my two beautiful pieces, and that's it. There's no capital loss. There's only a lot of fun.
just a
real estate.
depreciating asset. But other than that,
Yeah. Luca, it's still real estate still remains, even though we're in a down market, even though we're feeling the pain, it's still one of the most stable asset classes that anybody can invest in, and it's made more people wealthy than any other type of vehicle in history. Because we're talking history, the tech world, obviously,
Yeah,
that
it's
these tech big exits are I think more newer to in relative terms. It's newer in more in modern times than we see in real estate. Real estate is, if you go through history, all throughout history, real estate is the main one. And when you're talking about a family office that's thinking 30 years ahead, 50 years ahead, because of the size of capital that they're playing with, real estate remains, I think, the majority of that real estate, because it's the only predictable one. Now going
true.
forward, that might change a little bit because the population formulas are changing a little bit, and that's one of the things I'd love to talk to with Robert. But before we get into that, Robert, what are you building? What are you focusing on? And you're working on something quite exciting and quite big. We've already gone through it together, but I love my audience to also know about it.
yeah. So we have built this company called Bode. Started right at the start of COVID. Uh, right before COVID, launched during COVID, with a goal of modernizing real estate transactions by connecting buyers and sellers directly with
Mhm.
technology and ease and data to carry out a transaction fully online for significantly less money and a much better experience. So it really started with that passion, which for me came from brief history in, cut my teeth in fiber optics, and seeing how telcos and cablecos monopolize, duopolize the market and hold prices where they do, and create the painful experience that we all get, paying over $100 a month for our cell phone bills and for getting copper services in metro centers in this country. Seeing how ineffective those regulations were, we were very much the progressive company that looked at it and said it's actually about connectivity and high performance um, connection to the cloud, so to speak, to unlock and think about that monopoly in a totally different way, or challenge that, I should say. So a customer now has the total control of connecting to all the apps in the cloud. Of course, that's obvious today. We did this back in the early 2000s, so over 20 years ago. And the reason I bring it up is it was inspiration for this model, which is give the customer everything that they don't have, which is contracts, access to data, access to listings and the marketplace that comes through being licensed. So we looked at it from a regulatory perspective and said, there is just no competition in the space. There's 120,000 realtors. They all charge the same amount in their markets. BC charges the same amount within it. Alberta charges the same amount. Ontario charges the same amount. And it's somewhere between 4, 5, and 6%, depending on where you are in Canada. And if you look back at the early 2000s or late 90s, all right, there's a human network component to the way real estate was done at that time. There was the need for the human connectivity, for calls to be made, for signage to be put up. You got to drive people around. You have a asymmetry of information because there's no digital age yet.
Yeah.
Fast forward to the start of COVID, we started the company. I just looked at it and said, if you go across all these points of the experience, if you create a really amazing service, technology is awesome, but it's always about the value to the customer. We can really change the nature of home affordability and the efficiency of a transaction in a market that desperately needs it. When 5 and 6% was of a $200,000 home, okay, but the average property in Canada is now 800,000 plus. That's now a huge number. And at the same time, there's less work being done and less value being provided by the traditional system. So I didn't start with a vendetta against agents. I started with, and my co-founders and I started with the vision of creating a much better experience for way less money. And we do that with consumers and now large developers as well. And sold almost 4,000 homes across Alberta, BC, Ontario, and having our sights on a larger expansion we can get into as well. But that's really where we started.
So you're at 4,000 now.
Almost at 4,000, yeah.
And which areas are mostly where you're seeing the most action on the platform? Which areas of the country are mainly comfortable using it and are coming to the platform versus you trying to pull them?
Alberta, BC. Alberta is the leader, and then BC and Ontario. We have more time here. Obviously, we have network here. We started here, but Alberta is also, Sam. I think you know this conversation over a few drinks, a few times of more willing to try, more willing to push the envelope and adopt technology earlier. It's a little more cultural, it's a little more competitive in this province when it comes to that.
Yeah.
So we've seen that with early adopters of large builders, as well as the more profit focused headspace of most Albertans when they're saying $15,000. If I can save $15,000 on my transaction and make a percentage or 2 points higher in value, because I'm better at, if I have this platform, I'm actually better than an agent at transacting the property. $20,000 of tax-free equity, Luke, as you were saying, with 50% capital gains tax. That's one of our biggest tax advantages we have left in a country that has inflationary challenges and income growth challenges all at the same time. So that's when I start to get a little bit too high on my soapbox about how important this is. But I do believe that 90% of your transaction costs, are in realtor fees. So you have an illiquid market as a result. You have this dislocation of money that gets spread around in awkward ways in the economy instead of aligning interests with the homeowner that took the risk and got the mortgage and owns the asset and should benefit from it.
No, 100%. I think in any space actually, and you saw it in anything like watches, like luxury goods. The broker fees actually was killing actually this market, because I cannot. What's the incentive for someone to sell whatever a watch for a little bit of profit when you know that the person that just like closes the transaction makes like a 20% margin on top of it, which is ridiculous.
Well, even within the broker's fees, we just take realtors, they're variably paid on the buy side. So they're
100%.
literally motivated to make their client pay more money. Like it just doesn't make any sense from an incentives perspective.
No, but it also creates imbalance, right? It's creating imbalance in the value of houses in this case, right? Of properties. That's my kind of like allergy to the whole kind of like because when you say a lot of people got rich, yeah, sure, having cap on cap on cap on cap, everyone is but there is no stabilized. I think the issue is there is too much fluctuation on the market value, right? To create some sort of like stable trend that we can. And basically those realtor and agents are in between to kind of create the negotiation that we as buyer and seller don't want to kind of like be bothered with. But what if in your case, and I guess that's what your platform does, what if I can already give you the fair price and you can trust me as a third party that I'm not actually trying to screw you over, because I guess your model is on a kind of like a stable fee or like whatever, fixed commission. It makes it easier, right? You have no interest in selling something for 10x value because you make probably the same commission as selling it at the lowest price.
Yeah, and that was a key part of the model creation is it's free to buy a Bode listing, and it's now $949 for the seller to go live, or 1%. We let them decide. You want to lock in the lowest number, $949, or you say, I want to only pay out of proceeds, then it's 1% versus 4, 5, 6%. So that's where the $15,000 plus in average savings comes from. And exactly to your point, and this is getting where a company like ours gets really exciting, is AI is a huge weapon for us. It's a huge creation of ease and transparency and sophistication and convenience for the customer, well beyond an individual. Forget realtors. It's PhD in economics and masters in law, and we're blending together. We did this analysis of our AI, which we can talk about if you guys are interested. But it would take a team of 95 people working 7 days a week to create the capability that we are now able to and have live in the market, our proprietary real estate AI that we built with Amazon Web Services as a partner and sponsor. Like it's so far beyond a human that it's almost incomprehensible at this point.
No, because let's be very honest, and I would love actually to deep dive, but my if I have to make a bet, and we can make it, I guess you're moving into this new area where agents, they change the nature, but they don't change their outcome. So you are kind of like, to your customer, you give the option, say, do you want to buy a house? Don't actually waste your time chasing someone. We have AI agents that can actually do it for you, and it's way more efficient, right? Because one thing that I try to describe to people is that human interactions, they contain something that is detrimental for business, is feelings and ego. Agents, they are only outcome driven. You tell them to do something, are machines, they're going to do it. Plus minus their distraction, they're going to do it, right? Different than a realtor. And look, I have nothing against these people, to be honest with you.
Yeah, likewise.
I think they were necessary in the economy for us innovator to make them irrelevant. So it's completely fine. But at the same time, unfortunately, all this kind of like a broker intermediary between A to B, so from consumer to producer, or demand and offer, with AI, they're going to be hugely revolutionized, because first of all, your comp analysis, my AI can do it in 5 seconds at the most. Like a comp analysis is just like easy, right? Your estimate of median price value across the years and depreciation forecast, done, right? And it's done by a calculator. It's not done by a human that is trying to basically cut corners to make the highest margin and commission possible. Yeah, I'm so sorry that the Lamborghini will actually cut the number of leads next year, but what about if your agent, you will see it? Actually, you know what you should do, Robert, just for fun? We should actually go to a hackathon and do something crazy where your realtor agents, they actually drive virtual Lamborghinis, and you can see them, right? Some sort of thing. We can even have it here in the street of Vancouver. We make Burrard and so on, and you can actually have them drive. No, jokes aside, I mean, I'm not. We are friends with many realtor, but yeah, too bad. The fact that they're called agents didn't really make any help to them, to be honest. Nowadays, even your grandma actually is going to say, oh, no, I have it. It's here, my realtor. Look, on Claude, I can get it. Right?
So our AI, exactly to that point, we're blending the world's best LLMs with Amazon orchestration capabilities and the licensed data and our data to create a true, back to your point of how tight can you make evaluation, how smart can you make a property-centric level of intelligence? Because Claude and GPT and Gemini, incredibly impressive models, very wide but thin, right? Like they know a little about everything. If they don't have the in-depth specification of your home and the relational data, they're going to give you generic insights, not actionable level. You're going to make the bet on this kind of insight. That's what we do as part of our service. And so you're getting the best of both worlds. You're getting the best LLMs and you're getting the best data, and you're blending those two things together. And to your earlier point, I think it's a really important one. We don't have a bias in the market. We have a designed model that is supporting a transparent sector. So when we're providing data, whether you're a buyer of a property, you're the owner of the property, you're managing the property, it's giving you the same calculation because that's the actual market. It's not influenced by any special interest wrapped around it, kind of at the micro level. It is using the real market data. So now you've created symmetry where there was asymmetry. So parties, and we see this often in transactions, when a seller is dealing with a buyer directly, no buy side agent involved, it's the smoothest transaction because they're both using that same information. So they get reach agreement faster, they see exactly the alignment. And then the deal, in fact, most of the times they become friends because they're all the way to the point of, that makes sense. Yeah, we're using the same information. This has integrity. Done deal. And we both just saved the transaction saved $20,000 when you include
Yeah,
everything.
and to be honest, like to me, being myself a lawyer and a son of a real estate lawyer, the thing is, the world of real estate has been dominated by that kind of like fiduciary BS that agents have towards seller and buyers. And to me, it's just like such a, sorry for the French term, BS thing, because I'm not disregarding the fiduciary. I'm just saying the issue is that that negotiation, you can see it in many actually TV shows like Ryan Serhant and all those kind of things. There's a lot of kind of like extremely controversial kind of like relationship between buyer and seller because there's a conflict of interest. Like what we actually never really realized and the same is going beyond the world of buying and selling houses. Is the same in the rental space. There's a huge disruption that can happen. The other thing is definitely you actually mentioned is the fact that you are basically enabling a streamlined process where there is actually full transparency and freedom, right? Because now your adjudication process for mortgage can actually be streamlined in no time, right? Because you don't have to actually do any sort of you're almost kind of like a guarantor. You're almost kind of like this kind of like third party that can actually go to the bank and say, look, this is the objective data. There's no
Right.
subjective data valuation. There's no scamming. Try to get more money to make my kitchen and so on and so forth. Is all kind of like purely factual.
Yeah.
It's very interesting. I think if I can take a small leap, and Sam, please step me because I'm very passionate of this. When tech tries to disrupt human, I'm really all for it. Especially humans that they go around in a Lamborghini. But my thing is, probably you guys heard about what Serhant is doing with his own venture, bringing kind of like AI to the world of real estate agents and try to make similar thing in the transaction. So I'm kind of like wondering, well, first of all, how can I phrase it in a very polite way? I believe in people that are extremely that they are motivated like me to disrupt the world and not to actually hack the world to make more money, because I think that's not going to bring any benefit to the next generations, being our children. It's going to just bring only immediate value to these entrepreneurs right now, and it's going to basically stop there. If you want to basically build something to just be bought by Zillow because you are a pain in the bum for them, there are a million of ways that you can do it. Go and raise whatever money at crazy valuation, show transactions, Zillow is going to buy you. But for what I understand from your motive, your kind of drive, there is a real kind of like drive that is brought not by multiplying the value of your pyramid scheme with the real estate agents, but it's mostly how can I actually remove this problem once forever? Can I wipe and bring more benefits, more actually cash to the buyer and to the seller's pocket so they can actually scale themselves their own investments and so on and so forth.
Yep.
So I'm just wondering, where do you see the key differentiator in what you are building against the competition? Like, because you're not the only one. So what is kind of like something in your mind that you say, damn, you know why we are better? Because I show them every time that I hear they do this, I can show them my middle finger and buy another 10 customers.
Yeah, I'm kind of equated to, you really resonate. And Sam and I have had these conversations as well as long-term, fundamentally sound market enablers. Like that's really what our focus
Right.
is. If you take the real estate segment in any industry, you either need really effective regulation or really effective competition or both. In real estate on this topic, we're 0 for 2. So we are bringing, yes, there's some other providers out there, but they've mainly been focused on just the lowest cost play that gets your listing up, and then it's full DIY, right? Go
Yeah.
to Home Hardware and buy a sign. Go take your own iPhone pictures, or go try to find a photographer. Figure out how you're going to get that actually the word out about it. You have you have a ton of work that goes into that. In our world, your listing goes live in 10 minutes. Everything's tracked online. You have all the data. You have 24/7 support. You have QR signage. You have professional photos, and you get syndication to every listing site, which is where 90% of buyers are. So
Yeah.
we've included what actually sells homes. That's why we've been able to sell 4,000 homes, because
Well,
that's the way the digital market actually works. So from that perspective, like in the broader sense, I like the Uber and taxi cab analogy for this, right? Taxi cabs look a lot like realtors. They've got the license, they've got the monopoly, they've been doing it for decades and decades. Uber shows up with
They've got the lobbies.
right?
the medallion lobby, right?
Powerful, right? So
Very
Uber,
powerful.
Uber shows up with a really just a slightly better experience and tracking that's a little bit safer and creates more optionality, but really creates competition. And now you have not only Uber, you've got bikes, you've got scooters, you've got all the different rideshare. Like that spawned a competitive market that has made transportation so much easier, cost effective, and safer for customers. That's what we're doing. We're just saving you $15,000 instead of a couple bucks, which so we just see that as such a big, we're much more infrequent, obviously selling 5 to 7 years at a time. It's a typical Canadian homeowner, but that's the context we look at. I don't think realtors are going anywhere, but I do think there's a Uber to taxi cab dynamic that when we're fully scaled and fully having the impact our vision pushes us towards, that's a way better market. Now these choices and these different ways to do business. Before us, there's basically two ways to do business: pay that $500 and get a listing and your full DIY, or it's 5%. There's nothing in between. We just saw that the sweet spot that we have is the best of both those worlds. Incredibly high value with a better experience. And that's only accelerated by AI, because when you're hiring a realtor, you're really hiring their IP, right? You're hiring that person. You're trusting that person. That's their value. In Bode's case, we give you that
World.
we give you the entire world of data on this topic, and then make it actionable because we have the platform. So we look at the next 5 to 10 years. Back to your question, Luca, we're not in this for the short-term gain and flip. We're in this as a fundamentally sound competition creator and different way of thinking. And giving the market some vibrancy, some complexion, some different ways of thinking that will ultimately drive a totally different real estate market.
Robert, what I love about what you're building and your focus area is that you really do focus on customer experience and making it easy for the customer to get as much done possible without having to lift a finger. The photos get taken for them, the property gets valued for them, the sign gets sent to them, the customers get sent to them, and essentially they have the ability to make a decision on how to sell their own home. That's amazing. But when we're talking about disruption and we were talking about a industry that is operated so traditionally, we're talking about resistance and friction. Where are you feeling the most resistance? Where are you feeling the most friction when disrupting such a traditional market?
Yeah, I think it's a well, really where we want to go as a business now that we've proven the transaction works really well is to move into the homeowner dashboard and the homeowner life cycle. Uh, so it's more, I would describe it as a category creation opportunity than dealing with friction. And maybe it's part of, I would say, our biggest challenge is people don't transact that often. So in this sense of, this happens every 7 years. It's expensive, but I don't have the mind for, like, I feel like I'm too busy. I, I'm not, I don't have to get good at this. I only have to do this once in a while. Um, we would say, asking any of our customers, we've never had somebody say, I'm using a realtor after they've sold with us, because we made that so easy. But I think that is our bigger challenge in the industry. It's how do we get a more recurring, high value relationship with our customer, and that's really where we're going with everything that AI can deliver around home ownership. So if you think of income opportunities, you think of cost savings, you think of value creation, understanding your ROI on upgrades and renovations, refinancing to pull out liquidity and move money around to make smarter other investments. Um, all of that complexity right now, as we sit here, we can, through our homeowner dashboard for free, create that intelligence. And I think it's a bit of a round way of answering your question, because we don't have issues with realtors on the buy side. We are regulated. We are experienced at that. We have all the audits and all we have to do. We have a managing broker. We're technically licensed, right? We just have this very different business model. So it really hasn't been that. Our bigger challenge has been creating this continuous high value relationship with customers, so that they are like, by the time they're ready to sell, they click a button and they're so confident because they're so empowered with all this very simple and convenient information that they can list and sell with us. So that's really where we're going, and partnership angles on top of that are really powerful with mortgage providers, with insurance, with finding and sourcing the best options for taking on any of those home management services. We think are in the range of $50,000 to $60,000 of financial benefit during your home ownership. So something AI can do so powerfully, and before that, not a real opportunity, but with it, it's a totally different category.
There is also kind of like a life cycle gap. Like if you think everything that we buy dies with the purchase, with the transaction. Like you buy a house, one thing that actually kind of like always baffled me is that I don't know, once that I buy it, I don't have a way to centrally see how the value of my house fluctuates a lot in time. I don't know if my house has been growing in value or depreciating. What are the factors of depreciation? That actually applies to, honestly, everything that we buy. Why? Because it's too easy to sell and disappear because the transaction is completed. But for example, there are people that, in my case, for example, I explicitly don't want to buy my house. I believe it's financially irresponsible to do that, because for my financial situation, to be honest, renting has better tax relief than owning. So that's plain and simple, right? But at the same time, I'm actually thinking, what if I drop like a certain amount of money, buy a property, and I let it basically stay on the market like stocks, right? But that's, to me, the nature of, so in Italian we say that houses are called immobili, right? That they don't move. They're something so static. And I think that's a clear representation of what the economy of real estate has been till the world of the time of AI. Because now with AI, what you can enable is that, as if I buy a house and I'm open to grow value and maybe move somewhere else, but it's too much of a headache for me to stay behind it. But if I have a system that tells me, hey, look, your house is appreciating every year on a 5% year over year. I think next year you can buy a house that is 1,000 square feet bigger, and I think you can even capitalize on this investment. Then I think we create a more cyclic economy of this kind of like buildings that they go for hundreds of years in family ownership. And the only thing that they do, they make rich, these few people, right? But they are not cyclic. Like they're not like what I like, for example, of other things is that they were designed to be sold and appreciated in a continuous way. Like you buy a watch most of the time, you buy a 5711 a Patek, and you know that it goes from 50,000 retail to 250,000. Are you still so emotionally attached to that watch for 5x valuation? No, I think you're going to put it in the box. For 220, you let it go. You buy something else that is going to eventually appreciate, because your goal is to get something that appreciates more and more and more.
It should at least be part of that equation. Like that's the way I look
Yeah,
at it.
it should be my prerogative.
Yeah, your home is where your family is. You have all the emotion. You make it your own. If you own it, that's the big advantage of having it. So you have all the true lifestyle and emotion and family benefits over here, but a gaping zero knowledge about your biggest asset for Canadians. You don't know anything about it other than you get your property tax appraisal once a year that has nothing to do with your actual value, and that's pretty much it. That's your one option. So with this, you now have 24, like we have a 24, because it's live data. It's 24/7 valuation. It's happening every minute. So
the value of that, I think, multiplies when we're talking about a portfolio of real estate properties. And I think that's from what I know, that's where you're getting a lot of your customers from. You're getting actually customers. A lot of your customers are coming from family offices, asset managers who have a portfolio of assets that they need managed or transacted on using your platform. So could you a little bit walk us through what your platform can do for those portfolios?
Yeah, so well, there's on the investor side. So we target three main subsets. You have your typical homeowner that loves AI and loves tech, and they're a millennial, and they would prefer to do things online than have a broker involved. They also book their flights that way. They book their trips that way. They bank that way. So there's conventional homeowner. Then you have the investor, Sam, as you say. There's actually many of these properties. It's a big market in Canada. Independent homeowners, independent investors that have an extra property, and like that's the bigger segment actually than the institutional guys, which I was surprised by when you add all that up. Then there's the more institutional players, so that's new home builders and developers that are renting or transacting and moving money around and playing the market. They're a big part of our customer base. And then the fourth target persona or user base is executors. And there's obviously a big wealth transfer that is happening with baby boomers, and they created and own a ton of property in Canada. That is moving on to the next generation, and often it's of course, the executor. It's their kid that is taking care of that process for them on behalf of the family. And one of the best ways to do right by your legacy and your family is maximize the value of that asset. And that often means selling it. Most people aren't moving into their parents' place. They've got their own life kind of set up. So 80% of the time they're going to sell that home. So those are the four that we focus on in Canada, and all different shapes and sizes. We've sold a $60,000 condo in Edmonton, which I didn't know existed, all the way up to $6-7 million estate homes and everything in between. So it's still the fundamental principle kind of remains irrespective of the property type and the size.
That's really neat. So you started the business in Canada. You started in business in Calgary first. First, your initial focus was in Alberta. Then you expanded across Canada, major provinces and rural areas in those provinces that have less access to essentially good agents. But now you're planning something quite big. You're planning on entering the U.S. market. Talk to us a little bit about that. What's your strategy?
Yeah, there's a blend of this was always part of our plan, because in the US, uh, the same issues are there. They have a similar regulatory environment. Just talking about like the transaction market, there's similar number of agents per capita. They charge that 4, 5, 6%, depending on which state you're in. Their state licenses. The regulatory bodies are actually related to each other, anyways. So we just looked at it and said that's the same problem. There are no boats in the United States. There are for sale by owner providers, and there are the traditional agents. Fundamentally, like Zillow just makes money off selling leads to agents. That's 85% of its revenue. So all the big companies are selling leads to agents. They're not taking the value of and this main issue, which is the cost to transact, head on. So that's what we see. We see a massive market. Obviously, we see the same pain points, the same challenges. The competitive, it's not more competitive for how much bigger of a market it is. So like that risk reward profile is really attractive. And then AI is, as I'm sure you guys are paying attention to, exploding. These IPOs are insane. The value behind the betting on who's going to win in these market segments is huge. And we've now got the platform, we've got the proprietary AI built out. So there's an opportunity for us to aggressively expand across the United States through acquisition and bring this service across North America. So that's where we're in the middle. I can't share all details because some of it's sensitive, but we're in the middle of that process.
That's so cool. Actually, it's kind of funny that tomorrow will be at a conference in New York, and for the first time in a long time that I'm in tech, I see the CTO of a real estate company attending and being on stage. So the CTO of Serhan, and to me, it's still a little bit kind of like difficult to to digest, because to be honest with you, I think we build technology to serve a purpose of really making people's life better. And I really think that we have in our hands a very powerful tool called AI, a tool that we have been trying to build for the past 20 years, and finally we came to a point where it's usable. But at the same time, we need to find still the right vertical application of it. Like, can we really cut? I mean, there's nothing sad about that. I think jobs, they're there to survive and to be. They're in a decaying process, right? And AI is just accelerating some of them. And I do believe that what you described, you guys are doing, is pretty interesting, because we have been collecting data for the past 100 years in paper, in digital, in many sort of form. And the only way that we actually improve was to build bigger Rolodex of people, kind of like building connections, say, I can sell you a bigger property. And there is a one side that actually it's very dear opportunity to me, because I know another entrepreneur that, Sam, we should invite, Claude. He built this kind of like Uber alternative for rural place called Uride. Phenomenal execution by this guy. To me, what I really like of what you said is that you start from also rural places. You start from places where it's way harder to increase the property value than in LA, where basically you take two wrapper and put them next to each other, and the value of the property grows insanely. Like, pun intended, like Rolex did to survive building machine-made watch. To me, that's kind of like the interesting part when you're using technology, that you didn't pick New York, LA, Scottsdale, or you go and pick Miami. You go for the usual suspect, but you actually picked an area where real estate was kind of like, I don't want to say harder to grow, but definitely had a ramp up cost and time for people to really justify the cost of transaction, right? And I think that's actually where it's going to start the revolution, and we're going to rebalance and equalize prices, because right now the disparity is exactly an opportunity that in this rural area and so on and so forth. And that's why there's high concentration in certain areas. So I think it's going to solve a massive problem that we have right now in balancing the cost of properties. Like here in Vancouver, if you think that houses they have an insane price, I'm still wondering why. I would rather pay the ransom, sorry to say, in New York, where I know that if I lose my job tomorrow, I have a million other opportunities down the street. While here in Vancouver, well, not much.
Well,
That's
for that you have to look at what Vancouver means to the global entrepreneur network. It's a place where they essentially retire.
Yeah, they go and hike.
No, they go and either retire or it's like a part. They live there for 6 months, part of their life. That's what Vancouver has become, because the only people who could afford a house in Vancouver are essentially the people who have some sort of a business or really successful in their field. So why they live in Vancouver when the job market or the business side of it isn't as strong is because it's just a great place to live and great place to raise a family. That's essentially what Vancouver has become.
Yeah, but the problem is, sorry, I know something to interrupt you, but the issue is really in where we start all this conversation, right? And we talk always about capital. Capital means economy, means government, means many variables in this equation. The equation here is that there is no centralized place where to rebalance the price of anything. And I think real estate has been clearly a playground for straight pipe Lamborghinis more than anything else. And I'm an hypocrite because that's how my father made a shitload of money. But the truth is, the old generation exploited the system that was broken by itself. And I think, I came to this chat not knowing what you were doing, Robert, right? So I come completely with no knowledge, no preconceived judgment or anything. I'm just speaking the truth. It's very interesting to see that we use finally technology to create a balance in a completely disbalanced environment. And I think that's the most elegant use of something that to me is very dear, that is technology, where I've been for the past 40 years of my life, basically.
Yeah, it's only as good. It's only as good as it provides value to the customer, right? Like AI is a tool, but it's only something. This always happens through big disruptions in like the technical side of technology. Obviously, when something's this transformational, people get lost in, well, you can do all this stuff with it. Think of the possibilities. Yes, but it still comes down to, are you helping somebody accomplish something that has value? If you're in business and you have that goal set, and taking this homeowner life cycle management as a point, yes, AI will have some compression on jobs, but here's an example where over that 7-year cycle, if you refinance more, if you renovate intelligently, if you find cost savings from utilities or monopolies, you're actually benefiting not only your asset value, but you're creating more jobs, you're creating more
100%.
work that goes with that. So that's the cyclical, I think. And Sam, you were saying, cascading effect, or a cumulative effect. And so we really see that. And then the liquidity in the market also improves, because as you were saying, Luke, and now you're paying attention to your values, you're treating this as an asset. This is like your part of your stock portfolio. So when it's time to make a smart trade, make a smart trade. And you're not going to pay 5-6% anymore. You're going to pay $949. So now the financial aspect of that works. And then it creates this liquidity within the home and within the market. So that's why we see it as so foundationally important, with the amount of wealth that is tied up in these properties, that is basically a black box for most people.
Yeah, but think about the revolution that Robinhood did to the stock market, the revolution of clearly Coinbase and other places in the crypto space. I mean, I think we are in the Uber example, democratizing black cars. It's genius. Like, it's giving that kind of access, and I think that's what I was telling to my wife. I said, for me, the issue is that I'm not deeply involved in real estate, and I generally do not believe and care about bricks. Like, I don't think, because there are so many variables that can mutate the value and fluctuate it. But I was just telling her, a few days ago. If I know that I have a way to continuously track on a day-to-day basis almost, or on a weekly basis, the fluctuation of my investment, I feel more comfortable in risking into taking something on a higher value, right? Like, I know that I buy a Porsche and tomorrow morning my car is worth nothing. But I'm telling you, that's what everyone thinks, because
Depends on how rare it is.
but in the past 4 years, I only
Bad
made money.
example with a Porsche. McLaren, maybe.
No, but the clear example is that, like, in you, Sam, you know, right? In the past 4 years, I only made money out of my Porsches, because because I know exactly which model is gonna go up, which one is gonna go down, where is the demand. So it's kind of like what I like about your idea is clearly the democratization of that data that it was before behind the scene, and now it becomes public to me, and it's going to be a meaning of trust that I can put on the table. I say, Luca, like, I still don't understand, guys, and I'm honest, why Milan I should pay 25,000 euro or more, or now is around 45,000 euro per square meter in Corsa Europa. Like, I don't, in the center of Milan, right? And I asked this thing to my father. My father tells me, well, it is the market. But I don't know. I as a buyer, as an ignorant, I want to have transparency on how that value grew and why it grew to that value. And then I can invest 50,000, no problem, because I can see the projection, I can forecast. So that's kind of like a very interesting model. But I know that we are almost over time. I want to. Sam said that you were raising money. Is there anything you can disclose on?
Yeah, his investment bankers are reaching out to me left and right.
So, but what exactly is your next financing round? What is the stage of your company? I'm just curious so I don't have to go on Crunchbase, and I can just ask.
Yeah, so part of this American expansion plan, we're targeting 50 million US to do that, and then we'd build on that from there as the initiation of that capital. So that's,
And it would be a Series A.
most likely it'll be private equity, given
Okay.
the nature of how we're planning to do it. We are talking to venture funds in the US as well, but it's a blend. It's a blend of family office, PE, and VCs currently in our data room. So it's kind of real time right now, but that's the goal here over the next couple of months.
Time to clean it up for the new IPO wave that is coming up, especially because if you are creating a foundational model for this vertical, I think you become a very interesting acquisition target as soon as you enter a minimal growth in the US market. I think they will try to basically clear it up, because you just said foundational model and this kind of vertical implementation, they become the day-to-day way that people they want to consume major providers, right? So when you are targeting any of the big player, being Anthropic, being OpenAI, being Google, they want to enter now consumer usage, because enterprise usage, they figured out the trick. Now, if they can blend it with the consumer path, because before they started with consumer, now they're enterprise, and now they try to blend kind of like these two spaces into kind of like end-to-end experience. I think you are touching a market that is very interesting, because what they can say is that, hey, why don't you invest the 2% capitalization in your stock into buying a new home?
Yeah.
Right?
Well, you take the financing aspect, the mortgage aspect of home ownership. If we have, and this is we haven't talked about this yet, but you two are financial experts, so you know how to refinance. You'd be able to run all that math yourself, no problem. Most people aren't. They don't own homes. So we have your mortgage documents and we have your real-time values. Then we know equity, we know term, we know break fees. We can instantly do a calculation that also benchmarks to live rates in the market and has partners that are agentically connected to us that say, okay, Sam, your $1 million home is actually worth 1.2. You can pull out 250,000 of equity right now at this rate. Click here to action that. And that's where this is going, because those guys look at us and say, that's my lowest customer acquisition cost possible. I've just integrated with them and it's all automated. As long as it hits these thresholds, I get in the course of a transaction, multiple refinances. I get the fees that go with that. I get the business that goes with that, and I'm competing for these kinds of services. So we blend all that together, creates a totally different, as you say, democratization, but also actionable level of change to your home. And
I agree. Impressive, man. Really, I really love what you're building, Robert. It was great to hear, and I know that we are at time, but I don't know, Sam. We should follow up with Robert. I'm curious to know where it goes.
Oh, for sure. We need to have him. We need to have him in Vancouver, and we need to do an episode in person in the pool. A pool episode.
Or maybe we
a pool episode with Robert. That's the next plan.
You are in Calgary, right, Robert?
Yeah. So you guys come here. We'll do a steak. I'll come to the pool there. Best of both.
That's a deal. Let's call it a deal.
Okay.
Just to stay in team. Let's call it a deal. Thanks, Robert, for being here. Sam, it's always a pleasure to banter. And we see you next time. Same time and same place.
Love it, guys. A lot of fun. Thanks.
Ciao, Robert. Good luck.
Robert.
Ciao. Bye-bye.
Bye.